Greetings. Welcome to my weekend market recap, 12th March 2023. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live stock and market analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Thank you, Dr. Jeffrey. I use the Q systems for my trading. All the Q components run on Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with a look at the live system. And this is 1 week where my weekend market recap analysis, that is the preferred trading direction, did not work out. I will look into one stock that I discussed and I took a long trade in the last market recap, and then I will explain how I managed, that is exited the trade with a small loss. I will come to that when I am discussing the USA market. Let's look at the global markets first. All ordinaries, Australian market broke down below trendline support and triangle pattern in daily, broke below one weekly trendline support, but another one is close by, also closed at the white direction line. So this is one situation where I will say that I don't want to buy, I don't want to short. There is a trend line support in daily also not far away. So I don't want to buy, I don't want to short, that is I want to stand aside, is going to be true for several markets and indexes. Let's look at Japan's Topix index. This was also in an uptrend. In the last market recap, I explained that one could take a long trade using the breakout technique. It broke out of the sideways range after many days, and that breakout gave a profitable long swing trade. As of Friday's close, we have a very bearish shape, bearish color candle that gap down at the open, closed near the very low of the day. Interesting, isn't it? This was Friday. Japanese market closed well before the USA market opened. The USA market was affected probably by the public news of Silicon Valley Bank going bankrupt, closing down. But the information was probably known to people before it became fully public. And we can see that from the Japan's market, sharp down move. The uptrend is still intact. So this is another case where I am not going to short because uptrend is still intact, but there is no buy setup. Friday's candle is very weak candle. Weekly candle is also not giving much confidence to buy. So I'm not going to buy, not going to short. Now weekly broke above the watermark support, broke out of the box region. If it can close back below the watermark resistance, then that will give a nice low risk shorting opportunity. In the weekly interval, of course, we'll take trades using the daily interval. We may look for shorting opportunities at that time. That will come if price can close below this daily watermark resistance. Not going to buy, not going to short for now. CSI 300 China market. CSI 300 was inside a range created by the trendline resistance and the yellow direction line and also the watermark support. Now it has broken below the watermark support, broke below the box range. Friday's candle color shape both are bearish. Weekly candle color and shape both are bearish. Weekly is reversing from trendline resistance. So in China market, I am not indecisive. I like to short the Chinese market. I will look for weak fundamental stocks in weak industries and look for low risk short setups. Next, India's Nifty 50. Another market where I don't want to buy, I don't want to short. It's inside a range created by trendline resistance and also the yellow direction line at the top, and at the bottom it is bound by the watermark support. Friday had a gap down open, big gap down. However, it closed with a long lower tail. That is a pattern that I don't want to short. Weekly backdrop color and shape both are bearish right at the trendline resistance and at the watermark support in weekly. If price can go below the watermark support in weekly, which will mean breaking this watermark support in daily, then I will look to short again. Now if you look back, the perfect shorting opportunity came at the close on Thursday. And prior to that, the shorting opportunity came on the bearish flow candle here. On Friday, I'm not going to short, not going to buy. If Monday it breaks below watermark support, I'm going to short. If it goes up, I will not be able to buy. I have to wait for this trend line resistance to be broken. May not happen in one day, especially because the fate of SPP will not be known probably when the India market opens or closes on Monday. Not going to buy, not going to short. UK's FTSE index. This was nicely going up until last week. The uptrend was intact. However, on Thursday, when the flow candle appeared, bearish flow with a possible flow short setup, and the weekly also broke below trendline support, that was the day to short UK market. So we saw on Thursday both India and UK markets gave very easy to decide short setup at the market level. And interestingly, once again in the weekly, the bearish headwind candle caught the very top. On Friday, I don't want to short because stop would be far away. Thursday would be the good time to short. Currently, no short, no buy. If that is the state of the global markets, we expect the global index to also show some weakness. Let's look at that. It was inside a range created by trendline resistance and trendline support. On Friday, it broke below the range. However, it has a lower tail. What is the Q approach? My approach? If a lower tail like this is there, I don't want to short at the close on Friday. I want to wait to see if Monday price can go below the low of Friday, then I am ready to short using intraday chart on Monday. But at close of Friday, I don't want to short. Now, if somebody took the short near the beginning of the day using precision entry template, then they would have some profit by the close of the day. They could decide to hold on to the trade overnight. Now, how to manage it? The approach that I follow is that on Monday, if it continues to go down, hold the short. If it goes up and breaks above early range high on Monday, then close the short. Close the short, that is with a small profit or with a small loss, whatever be the case, depending on the entry price on Friday near the open if somebody traded it. Now, this is a mirror image of what happened in the long trade I took 1 week ago in the USA market. I will look at that, and the way I explained this trade in the bearish direction, I exited the bullish trade 1 week ago in the same way. It's a mirror image. That was a long trade. This is a possible short setup that could be taken on Friday in the morning. At the close on Friday, I'm not going to short because it is having watermark support now nearby. Now it is inside a box created by trendline resistance, watermark resistance, and watermark support. So I will wait to see if the watermark support is broken before taking short. If it goes up, I'm not going to take long because there is one trendline resistance and then another one nearby. So on the long side, I will not find easy buying opportunity. On the short side, it will be easier. Now, before looking at the USA market, let's look at the stock that I discussed in the last market recap, and I did buy it also. That was AR. In the last market recap 1 week ago, I showed using QH that energy sector was the strongest. And if you remember, I looked at several energy stocks. AR was one of them. This trendline resistance was not there at that time, and I took the trade, and I mentioned in the market recap that I took it in the morning session. I'm living in the opposite time zone in Thailand, opposite to USA. So I took it in the morning session and I held it overnight. Now I remember when I was going through the energy stocks in the last market recap, I made this comment that oil at that time closed near the high of the day, Friday 1 week ago. And I was a bit surprised to see that all the energy stocks I was looking at, they had an upper tail, unlike oil. What does it mean? That means that if I was trying to enter the trade at the close, near the close on Friday that time, I would not buy. But I was already in the trade in the morning session. So how I managed it? On Monday, I was watching it, and if I can find the tracking mode, let's try to track it. Global tracking. Let's go to Monday. So Friday, on this day, I entered the trade in the morning session, and I was not happy to see during the market recap that it closed with an upper tail. And next day, that is Monday, and now global tracking is on. So I am on Monday 1 week ago, previous Monday actually. So it opened and then it created the early range high and early range low. Then it broke below early range low at this point, and I exited the trade. I had a small loss in the trade, but that is fine. Taking loss is part of trading. So long as we are not taking big loss, we will survive. We'll do pretty well, in fact. So this one I traded. I think I traded well based on 360 degrees analysis. subject to the fact that I am in the opposite time zone, and I exited it very well with discipline. During the week, I did not share any long or short trade except one that was on Tesla. Let's look at Tesla now. Let's look at the post. Always good to look back and see how the analysis are working out. Not every trade will work out, like AR did not work out. And the only other stock I shared was on Tesla. I shared it on March 6th. March 6th was Monday. Now, before March 6th, in the weekend market recap, before Monday, the weekend market recap, remember I was discussing the stock and I explained that if we bought using a particular pattern of jump thrust low, price extreme low, then came big move up 3, how we would be able to hold partial position at least for a long time. It gained by about 90 to 100%. Then looking at the weekly daily trendline resistances, we could apply stop, and somewhere here I think we would get stopped out if we used protection signal. All along we would not get stopped out on a closing basis. That is how one could buy Tesla at the low and hold at least partial position for a long time. Now on this day, that was my next analysis of Tesla, and that was bearish. On this day I saw that the stock was reversing from trendline resistances that I already knew. I shared that in the weekend market recap, and this was Monday. Monday I saw that it was starting to go down. The traffic light candle color was remaining bearish red in the daily interval. 30-minute interval, it tried to go up, then came down. In the 5 and 10 minutes both, it was coming down sharply, had trendline resistance, many of them, no trendline support, and importantly it was decisively breaking below early range low. So if I had a bearish view, and I had that on Tesla, I would have shorted. I did short Tesla. I mentioned that in the workflow session. I saw it broke below early range low, so I could take a precision entry, again opposite to AR in the bearish direction. AR I took in using early range breakout. In the long direction, here I took the short trade. Stop would be above early range high, but stop didn't hit. This is what I shared in the morning session. See how if I'm finding a trade, potential trade in the morning session, subject to confirmation at the close, but I'm finding it in the morning, then I'm using the precision entry template. If it is confirmed, great. Otherwise we are supposed to exit. I'm in the opposite time zone, so sometimes I may hold it if I fall asleep. But let's see how Tesla played out after that. I shared and took the trade on this day. I used options verticals. Then it continued to go down for all the days except Friday. Friday we can see from the activity bar it closed higher, but the traffic light is still red. However, if we shorted it at this point, which would be considered a value area, an area between the upper and lower boundary lines, using the concept of flow setup, our profit target, initial profit target, is the lower boundary which was hit, and much more than risk distance was covered even on a closing basis, much more than the risk distance. I entered not on a closing basis, I entered on the upper half of the candle on Friday 1 week ago. So a nice trade, profitable trade was there, and I exited at least partial position already. Am I going to short Tesla now? No, but if I had shorted, and I did short actually, I publicly mentioned that before knowing the result. partial position could be held if you wanted because the weekly is looking bearish, but partial position using guidelines we would book. So one trade worked out on the bearish side. The only other public trade I shared, bullish trade, did not work out. And I emphasize that is part of trading, and that's why we have a disciplined approach. That's why we have techniques to take small loss, and we are supposed to follow them. I did follow them. And I should mention one more thing. I am actually happy to take losses when I am disciplined. I am not happy to take profits in an indisciplined trade. Of course, disciplined trade profit I am happy to take, but I will rather take disciplined loss than indisciplined profit because in the long run, the discipline will pay me better. Now, having said that, let's look at the market now. Market ETFs for the USA market, and we'll see. I'll come to the conclusion. I looked at the market during the weekend, yesterday, Saturday. I'm not going to buy, not going to short. That theme is going to hold true for USA market also. This is S&P 500 ETF, SPY. Weekly is very bearish. Had a bullish reversal 1 week ago and now a bearish reversal. But the bearish candle is much, much longer. Also, the flow color turned bearish again. So bullish, cyan, then neutral, bearish, neutral, bearish. So it's more bearish than bullish. However, the daily stopped right at the trend line support. These trend lines are, if you start using, I think you will find them amazing. Looking back, this day would give us a short setup using the flow trend following short setup technique. You could take it using verticals if you are not comfortable or confident taking the short. I did not take the short. But if you took that, you would book at least partial profit seeing the trend line trend line support that held very well. And because it stopped at the trend line support, I am not going to short it on Friday. If it goes up, actually, I'll be happy to look for buy setups using the bounce long technique. We had very high volume on Friday. So on Monday, if it closes with a bullish shape candle, that will give me a bounce long setup. Will it happen? We don't know. The SVB scenario has to play out, but I'm not going to short, at least not at the close on Friday, and not buy also. I have to wait for the bounce to happen at the close on Monday, or at least on the precision entry intraday chart on Monday in the morning session. I should see is starting to go up, so I have a low risk buying opportunity using stop below early range low. I will prefer in this case to wait for the close because SVB is the second largest bank failure in the USA after Washington Mutual. It's a very major event. I will not like to risk much money on precision entry on the morning, in the morning on Monday, even if market goes up. Small money, it's okay to take a chance. QQQ, it broke below the triangle pattern in daily, but it stopped right at the watermark support. Has a small lower tail. Again, when that small lower tail is there, my approach is not to short at the close on Friday. If it goes down, I am happy to short on Monday. If it goes below Friday's low. Weekly is also looking bearish in shape, bearish in color. Dia, Dia was weakest relatively because it was range bound when the other ETFs were going up And on this day we had a short setup using the flow short technique. The weekly was already magenta for many weeks, so this had a proper go with flow short setup, and it was also coming down from many direction lines. That gave a very profitable short trade. At the close on Friday, it is oversold. I'm not going to short now. The shorting opportunity in Dia came here. It is looking very bearish, more bearish than QQQ, much more bearish than SPY. And small cap IWM, I was actually bullish on small caps on this day 1 week ago, because this was the only market ETF that time that broke out of the range. If we go back to the chart, look at the historical trend lines. This trend line resistance was broken on Friday 1 week ago. That made me bullish on IWM, relatively speaking, and I found that stock AR during the market recap. This trend line resistance was not there at that time. So only trend line resistance was this one, which was broken to the upside, but then it fell down, and now it is close to trend line support. So now it's too late to short, too early to buy. If I come back to weekly, daily, weekly also has trend line support nearby, daily has trend line support nearby. It will be nice to have both SPY and IWM go below the trend line support and go back up again above the support line, creating a false downside breakout, stopping out weak hands. That will give very low risk buying opportunities. No trade is certain until we close it, whether it will make profit or loss. But if this false downside breakout happens in both IWM and SPY, there will be low risk buying opportunities. Now, too late to short, too early to buy. That is an external view. Let's look at the market internal view using Q global market breadth, and we'll see there are reasons not to short from that angle also. Once again, if I look back, on this day I turned bullish Friday 1 week ago because of the Eureka and the accumulation count. Accumulation count was 2. I noted that it was not 3, 4, 5. I realized that, but I still turned bullish 1 week ago. But right after that, let's clear the lines. Monday was indecisive to slightly bearish, but Tuesday came the very bearish, confirmed bearish signal of a phoenix, the magenta color candle, thanks to Mr. Ian Woodward, may him rest in peace, and even more importantly to me, very high distribution count. That gave us a pattern of trying to go up and come down with phoenix and high distribution count. That was the day to turn bearish, look for shorting opportunities. Now in this week, 3 days of the 5 days have very large distribution count, 4, 5 and 3. That is heavy selling. By Friday's close, it is too late to short because one of the overbought, oversold internal health indicators, 3-month new high low, is already at the lower extreme oversold level, and the another overbought, oversold indicator above percentage of stocks above 50-day moving average is also very close, almost touching the oversold level. Those are also 2 reasons that I am not going to short now. Actually 3 reasons. 1, near oversold. 2, already at oversold, and too much of selling. Now if we look at the NYSE and Nasdaq exchanges, that is drill down from the market breadth total view level to the exchanges, we'll see something called bingo. Again, thanks to Mr. Ian Woodward, may him rest in peace. The bingo is the magenta down arrow that came in NYSE, not in Nasdaq. The bingo is, how I read it is, sell everything, even those of value, and that is coming in NYSE. We saw SPY and IWM both are near trendline support. That's why I am thinking that if SPY, IWM both give a false downside breakout, combined with the bingo sell everything, even those of value panic selling, we may have low risk buying opportunities next week. But I like to wait to have the proper setups appear in the daily charts based on closing basis, because this is very heavy selling. Now the oversold situation is also in Q edge. This graph was bullish enough 1 week ago. I have the snapshot, I don't know if I can find it. This is how the snapshot looked like 1 week ago, 5th March. This is what I shared in the market recap 1 week ago. Friday was bullish, and see the bucket analysis, percentage of stocks above uppermost bucket or percentage of stocks below lowermost bucket. None of them were at or above 30% level. So this is how it looked like at that time, and how it is looking like now. The breadth of sectors, industries, stocks from 1 month to 1 day is very, 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 very red. Greens have nowhere to hide, it seems. Sectors are 100% red over all the periods. Industries are 95 to 100% across all the periods, and stocks are no better. This is too oversold, and I don't want to sell on such buy on an oversold market like this. Certainly not want to sell short again, short new trades on this oversold market. And if I look at the bucket analysis, now I see the percentage of stocks in the lowest bucket is already at 43% level. That is too oversold. That is 43% of S&P 1500 stocks are already below lower Bollinger Band, not at, below lower Bollinger, 43. A little bit more down move on Monday, it will hit 50%, which may happen if the SVB positive news is not out by the market open. It may happen, just may happen. But Dr. Jeffrey in the past had shared historical data on this bucket analysis, how much more bearish it can go. It can go a lot more bearish. So I am not going to buy. It is oversold. I am not going to short, but I'll wait for it to show some sign of bullishness. This means the sector industry stock advanced decline. Now if I look also at the sector performance, 1 day, 2 day, everything is below zero level by big percentages, isn't it? And 5 day, 10 day, 1 month, everything is below zero level by big percentages. This is oversold, very oversold. Can become more oversold, so I am not going to buy now, but it's too late to short. And if I look at the technical breadth, weekly interval balance between bears and bulls using weekly signal, 99% of all signals in the weekly interval even bearish, 99% of trend continuation signals bearish, 96% of strength signals, and even reversals 99%. Nowhere to hide for the cyan colors. This is very bearish, so bearish that it is oversold. And see the number of bearish breakouts on the weekly interval number and percentage rather, 22 percentage. Bearish flow 23 percentages. Reversal 23 percentages. As I always say, if they are 10%, easy to find trades in that direction from that category. And now we have three categories going over 20%. That is very bearish. Not usual to see such bearishness. Probably started with the Fed chairman made a few appearances early in the week. That was bearish for the market because he said interest rates may be higher for longer, and then came the SVB news, Silicon Valley Bank. In any case, the reason is not that important for Q technique. I have the Reuters system stabilities. I know the news, but I don't trade based on that. Technical breadth, daily interval, also very bearish across all the categories. On Friday, we had 40% stocks. That is very huge. In recent times, I have not seen 40% of stocks gapping down at the open. And these are all liquid stocks. Very bearish, but too oversold also, too short. Now, with that kind of market, I don't want to look at any buy setups or short setups. One thing we can do, let's look at some stocks that may be at weekly trendline support, because we saw IWM and SPY both are at or near trendline support, and I'm thinking that if they create false downside breakout, I may have some buying opportunities on the long side that are low risk. So if that is the case, only thing I can probably do in this session is to go to the weekly interval and see if any stock is hitting trendline support. There is nothing that is bouncing up, and see the very few number of stocks. Yes, we have two stocks that are hitting trendline support. Now see what I am doing, because anyway I am not going to look for trade setups today. Just look at these two charts. See what I'm doing. I'm highlighting the two stocks and clicking the lookup finder. I'm in the weekly interval. Lookup finder will pick up these two stocks from the daily interval and show me. So they are touching trend line support in weekly. You can see there is no other signal here on the weekly interval. I could select both of them and look up daily. They have no setup. And on Friday they dropped, but you can see the Friday's drop was not so large. PNM dropped by 0.18%, PCH 0.3. That's much smaller compared to the market's drop. So we can look at these two stocks. Let's use Q Elite. We could use Q Global also. A defensive stock, electric utilities. This is looking very strong relative to how the market traded last week. This didn't budge. It's hitting trend line support in weekly. Daily is moving range bound. Now there is no buy setup. Not using stocks. There are trend line resistances nearby. Only way one could trade it is, in my view, just to trade bullish verticals. Bullish verticals, one could check the dividend yield. It's an utility stock. we can look at its fundamentals, PNM. But again, as a chart setup, I'm not going to buy a stock like this. Just for the sake of it, I'm looking at its fundamentals. PNM, isn't it? PNM. Just see if it has high dividend yield or not. Not very high. Considering the current interest rate environment, 3% dividend yield is not very high. Also, earnings growth is negative, valuation is medium. So when I looked at the fundamentals, even though the stock is looking relatively stronger, it's not a buy candidate. Even if it goes up, I'm not going to buy looking at that fundamentals. Okay, let's look at the other stock, PCH. From a buying candidate point of view, this is actually better for my style of trading. It is holding the trend line support in weekly, and it is not sideways. Went up, shallow pullback, went up, shallow pullback, and this week actually closed higher with very high volume. On Friday, there is no buy setup. There was a buy setup on Wednesday. It was holding trend line support in weekly, daily both, and it broke out of this sideways range on Wednesday. Wednesday would be the right day to buy. Now, next opportunity may come if it comes to the trend line support, which will mean it will come to the trend line support in weekly also and goes up from there. Then we'll have a low risk bounce, come pullback, come flow, one of them or multiple of them buy setups. Now, before concluding that, let's look at the stocks fundamentals. PCH, this is not utilities but not very non-defensive, also forestry and wood products. But we'll know the proper industry from Q Vital. Trace stations industry classification is not reliable, not for me at least. PCH. See, I mentioned that it is not reliable to use trace station classification, and trace station also acknowledges that the data that trace station provides in terms of industry classification is from a third party, and then don't provide any support on that data or reason why they are so different from Refinitiv or from other classifications. So it's not reliable to use trace station classification. And now we see it is actually specialized rates. That is a defensive industry, real estate defensive sector. We expect defensive sectors like utilities, real estate to hold prices better. That is true, but these stocks fundamentals are not good enough. Negative earnings growth, mid valuation, and dividend yield not very small, but in current interest rate environment is not lucrative enough, and everything was down on Friday here also. So in terms of fundamentals, even PCH, I am not going to consider buying. I am not looking up the industries because industry will be weak for almost all the industries. On the short side, I don't want to look for shorts. Let's just look at gold. Gold may hold up better, and it did actually break out of the trendline resistance on Friday. It had a large gap up open on Friday. So using the Q techniques, if we plotted GLD on Q Finder on Monday, on Friday, last Friday, then we would note that it had a gap up open and that it broke out right in the morning itself. So we could take a precision entry in the long direction, provided the stop was narrow. Let's look at that, how the intraday chart looked like on Friday. Changing to 5-minute interval. I use 5-minute interval in the morning session, 10-minute in the afternoon session for this template. Taking time to draw the lines, but I know early range high would have come at this point, early range low would have come here. It had a large gap up open, large move up from the close also. So when it broke out of the early range high, yes, the lines are drawn now. When it broke out of the early range high, we could take a long trend, putting stop below early range low. And we could book at least partial profit probably near the close and could continue to hold partial position. Another way that I often mention, and I do also, if I traded GLD as an ETF using the precision entry template, at the close I may close the entire ETF position and buy a position using the profit, buy a position using options using the profit. That way the trade becomes entirely risk-free. Why I would probably do that if I traded GLD on Friday is because if the false downside breakout happens in SPY IWM, GLD may again pull down. That's why I would like to book partial profit. It may be event driven very much based on how SVB scenario plays out. Let's just look at UUP before ending the session. Dollar index ETF. The weekly is remaining bullish in color, but Friday's candle is mixed. It's not bearish because it closed higher from the previous week. We cannot say it's bearish. Also, the candle shape is mixed. It does have one bearish indecision at the top, but no bearish setup because on Friday the trend line support actually held. Friday's candle shape is bullish but color is bearish. If dollar goes up next week, and in times of crisis dollar tends to go up, does not mean it will go up next week, but at times of crisis dollar tends to go up. Everybody loves dollar as a safe haven. If it goes up, that may also put additional pressure on the stocks. So in summary, I am not going to short anything as of close on Friday, not going to buy anything. Not only in the USA market, that conclusion is true for many of the global markets also. And some I am bearish now, like the Chinese market, not bullish on any global market also. Let me end today's session here. No point looking at more stocks. Okay, thanks, Dr. Jeffrey. Dr. Jeffrey just mentioned, I'm reading from the very important news he shared. Janet Yellen, Treasury Secretary in the USA, just announced US won't bail out Silicon Valley Bank. She is hoping to have a company to take over the bank quickly. However, there are other people, including Bill Ackman, the billionaire investor, who was publishing negative view on not only the market, on the whole economy, in case the US government did not bail out Silicon Valley Bank. There are different views, of course, always in the market. But thanks, Dr. Jeffrey, for sharing that. We'll see how it plays out. We'll probably have some view from the Asian market, if the Asian market sells off at the open and then starts to recover, probably some positive thing is happening in the USA. Otherwise, SVB, the Silicon Valley Bank, actually had branches worldwide, not only in the USA. Of course, they are US centric bank, very large in the USA, but they had centers in UK, centers in Korea, I think China, and certainly in India also. So the startups everywhere are getting affected. The confidence on the startups may also uh, be hurt if this bank collapses without a company, another bank taking it over soon. We'll see how it plays out. I anyway trade not based on the news, but I am aware of the news. Thanks, Dr. Jeffrey, for sharing that. Once again, thanks a lot for joining. I look forward to seeing you in my next session. That will be next weekend. I'll publish the date time on Twitter as usual. Have a great weekend. And as these examples show, there is no reason not to make profit. However, I am disciplined to take small losses when I need to. Thanks again. Trade profitably. Bye bye.